Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to a new week, our first edition of the Extreme Speed Live for the new week. Before we kickstart the session, I would really want to run through our daily routine just to quickly confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. So your highs will give me a positive feedback that we are good to go this morning. And if you have any technical issues from your end, probably the sound quality or the pictures, please let me know as well, and I will do the necessary adjustment to make your experience a good one. So thank you very much as I await your feedbacks. All right. I can see a couple of comments here. Well, from Murphy G to Rajas to Minion 990, Tariq 4. Good morning to you, my friend Leonardo DV. Good morning. 697. Thank you very much. Hello, Carrie. Thank you very much. I think with this couple of feedbacks, I will take this as a positive confirmation that we are good to go this morning. And it's on this note I welcome you all once again to yet another promising edition of the Extreme Speed Live, your daily dose of financial insights and trading strategies. It has been the last week was laced with a roller coasters of buys and sells and swing of emotions as market participants anticipated the Fed interest rate decision, the FOMC, and of course the Federal Reserve Chairman's speech, and to culminate the week with the NFP data, which of course changed the tapestry of the financial landscape, giving us a new scope to look at ahead of the new week. And of course, one of the key important thing that we were able to take out from last week was the fact that the most expected interest rates cut that was subject to start at the begin at the month in the month of March was finally thrown out of the window. And in fact, the robust data that came in from the NFP on Friday even went on to emphasize that interest rate hike may likely be on in stay for a longer period of time. And of course, this has changed the market dynamics so far, and we will be looking at this today, looking at things from a technical standpoint today, using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. And I have 4 to 5 assets on our watch list for today with simple trading setup that we will be using to guide them, and I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And today being the first trading day of the week, this is a good time if you have any assets or financial instruments you want us to look at for this week. This is the appropriate time for you to drop them in the comment section, and trust me, I will incorporate it into our plans for this week, and we will day in day out monitor this asset throughout the course of the week. So if it is a cryptocurrency asset, a currency asset, a commodity asset, whichever you have there and you want us to look at, this is the right time for you to drop them in the comment section. So with that being said, and for those who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us this morning. As technical traders, we usually gather here every day, coming together as a community to engage in follow-ups and reviews of our current trading position in preparation of the New York session on a daily basis. So it kickstarts officially 10 a.m. UTC, 11 a.m. West African time, and make sure you don't miss out on the ideas we will be deliberating on. So stay tuned in, grab your favorite beverage, biscuits, cake, whatever you have, and stay tuned in so you don't miss out on what we will be talking about today. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, trust me, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that are likely going to be affecting the market sentiments today. And to do this, we will be looking at the economic calendar, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course better timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, so far this week, based on the assets I have on my watch list, we will be looking at both the United States and the Japanese economic docket. Now, for this week, we only have two high impactful events from the United States economic docket, but to help us have a broader view into what majority in the market may be looking out for as impetus into the current market dynamics, we will also be including the mid-tier economic features from both economic dockets. Now, for today, Monday, February 5, we have the first one here is the Fed Chairman Powell's speech, which I'm not sure if this event has happened because I'm yet to get any highlight from my financial feeds to buttress the stance, but I think this is probably going to happen later today without a specific timing. But of course, everyone will be looking forward to what Jeremy Powell will be saying, as his speech holds considerable influence over the financial market, and of course his remarks will provide insights into the Fed's monetary policy stance, economic outlook, and potential future policy action. Now, the anticipation of this speech can significantly impact market sentiment, as traders and investors will closely analyze his rhetorics for clues about future policy direction. Then in about 4 hours from now, we will be looking forward to the ISM Services PMI, that is Purchaser Managers Index. This is another impactful event which is considered as a key economic indicator that measures the performance and expectations of the services sector in the United States. Now, a higher than expected data typically signals economic expansion, boosting market sentiment with while a lower than expected reading may indicate contraction, potentially dampening investors' confidence in the economy. Now, if we look at the previous data for the month of January, that is on the ISM Services PMI, it came in at 50.6. Now, before I go in further, it's important to note that the gauge is, we have a scale of 0 to 100, and anything above 50 is considered as positive, giving us signs of economic expansion, which of course will boost market sentiment, while anything below 50 indicates that there is a contraction in that sector. Now, looking at what came in December, we had a figure of 50.6, which is a little bit averagely okay, just a little bit above the average of 50. And we have consensus based on what is on the ground right now. We all know that the US economy is very, very resilient in the last couple of weeks. Economists are projecting 52, so which is a little bit higher than the average. So we look forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? Then we have some couple of speeches too that we will be looking forward to, that everyone will definitely want to scrutinize to have an idea into the monetary policy outlook of the Federal Reserve. One of which is coming up in about 6 hours from now, and that is the Fed Goolsbee speech. Austin Goolsbee is the president and chief executive officer of the 7th District Federal Reserve Bank of Chicago, and of course is serving as a voting member of the Federal Open Market Committee, the FOMC, and of course whatever he says today is going to hold weight on what market participants will want to look out for to guide their trading decisions. Then later on today we have Raphael Bostic, who is an American economist and also the CEO of the Federal Reserve Bank of Atlanta. He is also a voting member of the Federal Open Market Committee, the FOMC, and whatever he says today will also be scrutinized for cues into the health situation of the United States economy, and of course the monetary policy, the future monetary policy of the Federal Reserve. So these are the most important events we will be looking forward to today. And one thing we do understand is that as technical traders, the anticipation of this event has a way of influencing the market structure, and which will dovetail on the chart as price action. So talking about price action, let's get down to the business. The first asset we will be looking at this morning is going to be the US oil spot. And interesting enough, the last week has been quite surprising for me, as we saw price drop significantly to the downside. And to me, despite the heightened geopolitical tensions in the Middle East, crude oil prices surrendered its gains. Remember, a couple of weeks we were looking at a potential reversal pattern on the higher time frame, but surprisingly last week came in with a strong nosedive. Now, the United States and the United Kingdom carried out new airstrikes on the Iran-backed Houthi militant group in Yemen over the weekend, yet this has not sustained the upward trajectory in oil prices. Now, the release of robust job data from the United States has played a pivotal role in reducing the likelihood of interest rate cuts by the Federal Reserve in March, and the anticipation of higher interest rate carries the potential to dampen economic growth and curtail oil demand in major economies, contributing to a decrease in crude oil prices. Now, looking ahead, the OPEC Plus are expected to grapple with a long-term challenge in 2024 and 2025. This challenge arises from OPEC Plus endeavors to trim global supply by enforcing stringent production quotas on member nations. However, a noble concern looms regards the possibility that non-OPEC producers, particularly the United States, could potentially surpass the OPEC plus supply cuts, leading to an oversupply in global market. Now, this dynamic has an element of uncertainty to the future trajectory of crude oil prices, but the idea of a oversupply in the global market has a tendency of inciting further bearish momentum. Now, let's look at things from a technical standpoint, and in fact, let's scale up into the daily time frame to look at things from an holistic standpoint. Now, on the daily time frame, after considering the nature of price action in the last 5 to 6 months, that's since the month of September, the structure we have about since the beginning of the year has slightly changed due to the recent situation in the market. Now, after considering the last 5 to 6 months, it's very clear that price action has been bearish, and in fact, I did connected the series of lower highs in that regard, and in fact, I have a couple of descending trend lines that you will see here. But the major one we shall be using for this week is this one right here, which slices through that $72 area. So I will delete this one, and this one right here is going to be the one we will be using for this week. Now, if you take a closer look at the structure, you will see that since the beginning of December, despite the strong bearish momentum in this market, we saw how this area within the $72 area and of course the $68 area had played a major role in negating all attempt by the sellers to break through to continue the downward trajectory. Hereby, as a result of this, I labeled this area as a demand zone going forward, and we want to see how the market is going to react to the structure. Now, a couple of weeks ago, we saw how price broke out of that descending trend line for the first time, and from a technical standpoint, when price breaks out of a key trend line like this, we expect that some point in time price may come back, retest that structure in an attempt to continue that uptrend continuation that broke out of the trend line. And as at last week's trading session, we saw how price action came back into the trend line just to close right around that structure. And since the beginning of this week, we have seen price action still trading around that area. Now, the question going into this new week is, will price action find support around this area where the appearance of buy pressure here could incite the next phase of bullish momentum, or are we going to see price break through that descending trend line, maybe breaking further into the demand zone to incite a sell-off to the downside? Now, with the information we have gathered here on the daily time frame, you would agree with me that we are at a crucial juncture where anything could actually happen, where both buyers and sellers could incite a big traction from the structure. Now, with this information we have gathered here, I have a simple setup on the 4 hours time frame, which we will be using to guide in further how we will be positioning ourselves for this week. Now, scaling down into the 4 hours time frame, the first thing I was able to do here on the 4 hours time frame was to consider the nature of price action since the mid-month of December. That's about an historical data of 6 to 8 weeks. And one thing you will notice here is that despite the strong bearish momentum in the last 5 to 6 months, you will see that buyers have been trying to gain momentum. And if you look at the structure closely, you will see a series of higher lows here. And when we connect them, we have an ascending trend line to work with. So right here on the 4 hours time frame, it's been more of price finding higher lows in this market. Now, as at the end of last week trading session, we saw how price came to close around that ascending trend line, and as soon as price got into the ascending trend line, we begin to notice some buy pressure resume from that point. Now, will this be a platform that will incite an uptrend continuation, or will the ascending trend line be broken to the downside to incite a sell-off? Now, another intriguing thing about the structure is how price is close to that descending trend line I spotted on the higher time frame, on the daily time frame to be precise. Now, will this trend line be retested to incite an uptrend move? So we are really at a crucial juncture. Now, to have a better understanding into what is going on here, we would like to scale down into the 1 hour time frame to see how market participant has been reacting to the structure. And remember, we have our key level at the $72 area, which we want to see how market participant will be relating to this price level. Now, scaling further down into the 1 hour time frame, we will begin to see things more clearly. Now, since the new week has begun, the first 1, 2, 3, 4, 5, 6, 7, 8, 9 hours was more of price action confined within this range between the $72.78 level and the $72.20 area to emphasize the prevailing uncertainty in this particular market. And of course, you know how we do it in this community. Whenever price action falls into a range like this, because of the uncertainty, we'll have to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, as soon as price tested the resistance line of this range, we saw a sharp rejection here, which emphasized the strength of the sellers in this market, leading to the breakdown of the support line here, which interestingly shares a confluence with that ascending trend line we projected on the 4 hours time frame. And as you will see, price has broken down both structures, for me triggering a sell position. And if you in any way using the knowledge you've gathered in this community to capitalize on that opportunity, well done and kudos to you for capitalizing on that move. However, if in any way you missed out on this opportunity, let's see and remain patient if the market will come back to retest the structure. Of course, we know that when price break down key structures like this, there is a likelihood of price coming back to retest structure in an attempt to continue the downtrend continuation. So, as at this stage right now, we want to hold on to a bearish bias as long as price remains below both the ascending trend line and our key level. Now, for any sell positions within this area, please ensure that you have your stop losses way above, close to the resistance line, or way above the ascending trend line, as you do want to be given enough breathing space for price action to move around. So at this point in time, I have a sell position running, and for those who missed out, let's see if the market will come back, retest structure to incite a new wave. Now, if price action does not come back to retest and instead it continues to drop to the downside, well, a breakdown of the $17.70 area will be welcoming more sell position. So I will mark out this level right here. So we have the $71.70 level. Let's have it duly marked out. Let me give this a different color. So I will just give it a coffee brown, I guess, and then let's give this to a coffee brown color. So if price continues to drop, then we will add more positions right there. Now, if this bearish momentum continues to drop, please, I would like you to listen attentive to this. If this bearish momentum continues to drop in such a way that it breaks down the $71.70 level and continues to find lower highs, please note that we identified a descending trend line on the daily time frame, which is quite visible here on the 1 hour time frame. So we want to see how price would react to that level. So we have currently We have a distance of about 85 to 90 pips thereabout. So as soon as price gets into this trend line, please move all stop losses, secure your positions while we wait and see how the market is going to be reacting to that structure. If buy pressure resumes there, that means price is retesting the structure in an attempt to continue the uptrend move. So if we can see a reversal pattern, any form of reversal pattern, it could be a double bottom structure, inverse head and shoulder pattern, or a falling wedge, mark out the neckline and then buy the breakout of the neckline. However, if price drops below this trend line and breaks it to the downside, then I'm of the opinion that we are within the seller's territory and we shall be looking out for more selling opportunities to join the decline to the downside. So this is my simple view on the US All Spot for today. We maintain a bearish bias here since price remains below the support line of that range and this ascending trend line we projected on the 4 hours time frame. Now please remember that any the condition that will make us consider buying this asset will only happen if price climbs back above the ascending trend line, leading to the breakout of the resistance line of that range at the $72.78 area before considering buying this asset. So let's see how the market will play out from here. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your charts. Alright, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. I see your comment, Bombino, good morning. SAS007, good morning to you too. Lovo, good morning to you. Thank you for checking in. Moving on. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq. We did phenomenally well on this asset during the previous week, where we scooped in a significant amount of profit, joining that strong bullish momentum that started the week. And for those of you who capitalized on that opportunity, well done to you. Kudos to you for staying faithful to the analytical approach. However, the new week has begun, in fact, with a strong consolidation phase to emphasize the level of uncertainty in this market as market participants await the ISM Services PMI for fresh impetus in this particular market. Now, to guide our trading decisions for today, let's run through the daily time frame and let's refresh our memories as to what we saw in this market during the course of last week. Now, the first thing we did on the daily time frame was to consider the nature of price action since the month of September, giving us an obvious fact that price action has been bullish. Now, within this time frame, we were able to identify a trend line, which of course has played a major role in guiding price action. And of course, you will see how price has interwoven around this ascending trend line within the space of 5 to 6 months to guide the trading decisions. And if you look at that trend line closely, you will see how the trend line has served as both selling niche and buying niche at the same time. Look at what happened here in the month of August. It was more of buying above the trend line. We saw here price was selling below the trend line. The same thing also happened in the month of October, continued into the last week of the month of November, before finally during the mid-month of December, price broke out of that structure, traded above the structure for a while, and then we saw a breakdown again right here, before finally, since the beginning of this year, price action has been trading above this ascending trend line. And of course, you know how we use our trend lines in this community, especially a bullish one like this. We want to always look out for patterns and structures that support the idea of buying as long as price remains above the trend line. Now let's zoom into the structure. In the last couple of weeks, something interesting has been going on in this market. Let me zoom in so we can see things clearly. Now, in the last couple of weeks, we saw how price tested a new high at the 17,685 level. And since price tested this level, price has been confined within a range, which of course emphasized the prevailing uncertainty in this market. As you will see, price has been trading within the 17,685 and the 17,150. And for the fact that this whole consolidation phase still remains above the ascending trend line, there is a high chance for this consolidation phase to transition into an uptrend continuation pattern, maybe a bullish rectangle, to incite an uptrend continuation only after price action breaks out of the resistance line of that range at the 17,685. Now, the 17,685 is our key level for this week, and you know how we use our key level. As long as price breaks out of the key levels and stays above, we want to continue to look out for patterns and structures that supports the idea of buying that asset. And as it is right now, I'm of the opinion that price may likely break out of that resistance line to welcome buying opportunities. Now, in as much as we are looking out for buying opportunities in this particular market, we cannot ignore the potentials that sellers can also come in. Remember, price is at a phenomenal high, and usually when price action finds a new high like this, it usually takes a while before price action acclimatizes with the zone to find new momentums to maintain the uptrend continuation. And due to this phase of trying to acclimatize, we usually see the emotion of fear dominates the market space, and this usually results in some market participants taking in some of their position, closing in some of their positions, profit taking activities, which could result in some retracement moves, consolidation phase, or choppy scenario. And of course, at the point we are right now, we have a consolidation phase going on. So if sellers could come in at this point, the only condition that will make us want to be selling is for price to break down this ascending trend line and the support line of that range to emphasize the strength of the sellers. However, maybe we could see an opportunity to sell before the breakdown happens. Well, when we scale down into the lower time frame, things will become a little bit more clearer. Now, looking at the 4 hours time frame, there's nothing much for us to hold on to here. Okay, we have our key level. Okay, still on the range here. So we shall scale down into the 1 hour time frame to see how price has been reacting to this current structure since the new week began. Now, zooming into the structure, so this is where we are right now, and since the new week has begun, the uncertainty in this market has continued. As you will see, price action has been confined within that range between the $17,639 level and the $17,575 area. Now we have a flat range to work with, And whenever we have this kind of pattern, we want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with this information we have here, it makes a lot of sense for us to position ourselves above the resistance line with the hope that price may break out of that structure to trigger our first buy position for the week. And if price continues to climb, a breakout of the key level at the 17,685 will definitely welcome more buy positions for us to capitalize on. So this is what we will be using to guide any uptrend continuation at this point in time. And please note that while we position ourselves for the buy position, please note that we want to have our stop losses in place close to the support line of that range, which will be dovetailing to between 40 to 55 pips depending on where your entry point is. Now, like I stated on the daily time frame, in as much as we consider the uptrend, the prelude price action, which is more of a bullish perspective, we cannot ignore the potentials of sellers too. We could see profit-taking activities take over this market, resulting in a short-term retracement move. And if that is going to be the case, then the breakdown of this support line of the 15,575 could welcome a sell-off to the downside, where we shall be looking at a TP target maybe somewhere around the 17,380, dovetailing to let me see how many pips that is, but that's about 180 pips. Hold on a second, I have a support line here on the 4 hours time frame which I would like to project into. Okay, we have it at the 17,125. So we could see price drop to as far as that area depending on how strong the momentum is. We have the trend line here dovetailing to about 340 pips, and we have the this one here about 470 pips to catch here if price action dropped that far. So our center of focus for today's trading session is going to be between the 17,639 and the 17,575, where depending on the direction of the breakout will give us an idea into where price will likely go, at least for the first half of this week. So I encourage you to mark out this level, as you will be needing them as a reference point to guide your independent trading decisions for today. So if you have any questions, feel free to let me know in the comment section, or probably you need some clarifications. Trust me, I'm here and willing to be of help in that regard. So I will take some 5-10 seconds thereabouts to wait for your questions, if there are any, before we move on to the next asset. All right. So in the absence of no questions, I will take this as a confirmation that we are all on the same page, and all I've said has been quite explanatory. So with that being said, we will move on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY. What another phenomenal week we had from the previous week, as we did capitalize on that buy opportunity following the NFP data that came in phenomenal on last week Friday's trading session. Though we had a choppy situation during the course of the week before we finally gained that momentum and I do hope you capitalize on that opportunity. And for those of us who did, well done and kudos to you. Well, since the beginning of the year, the USDJPY has been a profitable asset for us. Remember, we have been buying this asset since the beginning of the year. And about a couple of weeks ago, I think about 2 to 3 weeks ago, we were able to scoop in over 800 pips in profit on this particular asset. Now, as it is right now, we have a situation where price has been consolidating for the later part of last week, stroke the Asian session. And we also emphasized the fact that during the previous month, we had some situations where sellers were about to take advantage of the momentum due to the hawkish remark from the Bank of Japan's governor, but it failed due to the resilient US economy. And from a fundamental perspective, the Japanese yen is struggling to recover after hitting a new low during the Asian session, and the Bank of Japan's hawkish stance on pulling short-term rates out of negative territory may serve as a crucial factor that may lend support to the yen this week. Additionally, concerns about geopolitical tensions arising from conflict in the Middle East, coupled with worries about slowing growth in China, are factors that may bolster the ascent of the yen. So we need to take all this into consideration before making any decisive decision. On the other hand, the increasing belief that the Federal Reserve will maintain higher rates for an extended period of time continues to underpin a potential uptick in the US Treasury bond yields, providing support for the US dollar. Consequently, it is essential to exercise caution, especially on a day like this, ahead of the release of the US ISM Services PMI, to give us a platform that can guide our trading opportunities going forward. Now, with this being said, let's look at things from a technical standpoint. And to start with, we will begin on the daily time frame, where the structure we have on the daily time frame still remain valid. We have been using this since the beginning of the year, and after considering the character of price action since the beginning of the year 2023, it is quite obvious that the market is bullish. And in fact, we have an ascending trend line to buttress the strength of the buyers after connecting the series of high and lows. Now, besides this ascending trend line is our key level for this week, which is duly situated at the 148.500, a level which will be serving as our yardstick going forward. Now, why is this level so important for us? Well, if we go left, in fact, if we go to as far back as the month of September, we can see how this level had played a major role in determining the direction of price action. Sometime in the month of September stroke the month of November, this level had played a major role in negating all attempt by the sellers to break through, hereby making it a strong demand zone. And not until the last day of month of November that we saw price broke down that structure successfully for the first time in about three months. And since the breakdown happened in month of November stroke December, we saw that price action has been trading below the structure for about 3 months now, to emphasize the strength of the sellers. Now, if we zoom into the last 3 weeks in this market, you will see that price is back into the 148.500 area. And despite the strong bullish momentum that started this year, 2024, we saw how it has been difficult for buyers to break out of that structure in the last 3 weeks to further emphasize the strength of the sellers. Now, from a technical standpoint, if we look at the structure, following the impulsive move that broke down that key level at 148.5. Technically, we expect that price may come back, retest the structure in an attempt to push price to the downside. But we saw some signs yet last week to push price to the downside, but unfortunately this didn't hold for long, as on Friday, following the NFP data, we saw a strong engulfing bullish candle, bringing price back into that 148.500 area. Now for me, the appearance, or let's say the emergence of an engulfing candle at this critical juncture is a sign that buyers still have a say in this market. Now going into the new week, the question is, will price break out of this 148.500 as a result of a resilient US economy to incite another wave of bullish momentum, or will the hawkish remark from the Bank of Japan's governor be a key factor in maintaining the selling pressure below the 148.500 to incite a bearish move, at least maybe into this ascending trend line, dovetailing to over 500 pips in that regard? Now, to answer this question, we have a simple setup we will be using to guide our decision. And of course, I had something revealing the character of price action in the last couple of weeks in this market. Now, if you look at the structure in the last 2 weeks, it is clear that this market has been consolidating, in fact trapped within a 220 pips range, where price has been confined within the 148.500 and the 148.350 to emphasize the prevailing uncertainty in this market. And you know how we use our ranges. Whenever we identify them like this, we exercise patience and wait for either the breakout of the range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. Now, zooming into the structure, let me zoom in. Let's look at this. Price is back into the key level and of course the resistance line of that range. And in fact, in the last 1, 2, 3, 4, 5, 6, 24 hours, price action has been consolidating around that area. In fact, we could see signs of sharp rejection of that area, which of course reveals the presence of sellers around this area. Now, the question going into this week is, will the sell pressure persist to bring price back into the support line? That's about 220 pips thereabout. Or are we going to be having an outright breakout to incite an uptrend continuation? Now you can see how the key level at the 148.500 is going to be a crucial factor in guiding our trading decisions for this week. Now we want to be scaling down into the 1 hour time frame so we can see how market participants have been reacting to the structure. Can we identify a pattern that we can use to strategically position ourselves for the next move? Now, scaling down into the 1 hour time frame, you will see that since the new week has begun, price action has been confined within a range, and of course you can see how the Japanese yen is struggling to recover after hitting an all-time low for the year 2024 at the 148.825 during the Asian session today. Now, looking at the structure here, you will see that price is currently trading, oscillating just around our key level at the 148.500, forming a range in the process between the 148.825 and the 148.275 level to give us a structure to work with for this week. Now, with the situation we have here, it is obvious that the market is uncertain, and of course we know why that is. The anticipation of the US ISM Services PMI later today may result in some cautious trading activity as market participants wait for fresh cues to decide a short-term trading opportunity. So as it is right now, we have no other choice than to exercise patience, waiting for either the breakdown of the 148.275 to welcome selling opportunities for us, or the breakout of the resistance line at the 148.825 to welcome buying opportunities. So I do encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And if we consider the resilience of the US economy, and in fact the uptrend situation that started last week Friday before price fell into this range, I'm of the opinion that there is a high chance for this consolidation phase to transition into an uptrend continuation pattern. Now, if we, despite looking out for price to break out of the 148.825 before buying, I still think that we can join a bullish momentum even before the breakout of that resistance line happens. Now, this is why I have this temporary trend line here, which shows a beautiful confluence with at our key level at the 148.500. Now, if it so happens that price action can break out of this trend line and then retest it, please listen to what I just said now. Break out and retest the structure on our lower time frame. We could capitalize on an uptrend move even before the breakout of that resistance line happens. So I would want us to mark out that trend line too as well, and see if it can get broken and retested to capitalize on that uptrend continuation. So this is my simple view on this asset for today. So I encourage you to mark out this level, as we will be needing it to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. As always, I will take the next 5-10 seconds to see if there are any questions before we move on to the final asset on our watch list for today. All right, so in the absence of no questions, okay, I can see Isaiah asking a question here. Hello, Isaiah, how are you doing today? Good morning. How long will the bullish momentum for US dollar last? Well, no one knows that. No one knows how long or how soon it's going to last. So that is why we come here every day to mark out levels, identify structures and patterns that we will use to guide our decisions. If anyone tells you he knows when a price is particularly going to move and where it's going to stop, they are not telling you the truth. So what we are doing here is to manage ourselves within this uncertain environment. The financial landscape is an uncertain environment. It's an environment where no one knows where it's going to end or how price is going to move. But what we do here is to structure ourselves in such a way that we understand the psychology behind the price movement, and of course consider the fundamental factors behind the scenes which is driving the market sentiment, and then use this information and include with the technical structures on this chart to identify a precise point of entry and exit. So your point of entry is your entry points, your exit are your TP targets and your stop loss area. So, and to guide this, that's why we have levels identified on the higher time frame to guide these decisions. I hope I made myself clear, Isaiah. Okay. No one can dictate to the market. The market tells us what to do. We listen to the market gives us its condition, we listen accordingly, and then we act. So that is how it is. We cannot force or impose our idea on the market. Okay. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on into the last asset on our watch list for today. Stay tuned in. So the next asset on our watch list for today, and of course the last one on our watch list for today, is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And of course, I'm beginning to see quite an interesting situation going on in this market as the US dollar appears to be gathering some significant momentum as the new week has started, breaking down some of our key levels here to guide our decision. So I want us to listen attentively to this and stay tuned in. Based on what I saw this morning, I saw price action breach both very important key levels, which I will be sharing today. And of course, I am of the opinion that this bearish momentum that started this week is as a result of market participants dialing down their expectations for a more aggressive Federal Reserve policy easing in the light of a stronger than expected NFP data that came in on Friday. Now, this adjustment has bolstered the US Treasury bond yield, emerging as a significant factor that may undermine the appeal of safe haven assets such as gold. Furthermore, I don't want us to get carried away with the idea that the dollar is going to rise significantly, hereby undermining the appeal for gold. The persistent risk of heightened geopolitical tensions in the Middle East, coupled with ongoing concerns about sluggish economic growth in China, may also temper the recent optimism seen in the equity market. This cautious backdrop may serve to mitigate the downward pressure on gold prices. So what this simply means is that any trading opportunity we are going to be taking on gold today or this week is likely going to be a short-term opportunity. Now, as market participants eagerly await the release of the US ISM Services PMI, it is understandable that we may see some choppy situations ahead of this event. So we are going to be having a structure here today, which will serve as a framework that will be a beacon for today's trading activity. Now, before I share with you my structure that will guide today's trading activity, let's quickly run through the daily time frame so we can have an holistic perspective into what is going on in this market. Now, on the daily time frame, we have a structure here, a very simple structure which we have been using in the last couple of weeks, only that I had to change the key level to suit the current dynamics in this market. Now, the first thing we observed here in the last 4 to 5 months is the fact that price action has been bullish. And to emphasize this bullish momentum, we connected a series of higher lows here, giving us an ascending trend line to work with. Now, besides the ascending trend line here is our key level, which definitely will be guiding our trading decision for this week, and it is situated at the $2,035 area. Now, you know how we use our key levels in this community. As long as price action remains below the key level, we want to be looking out for patterns and structures that support the idea of selling and not consider buying unless price action climbs back above our key level. Now, with the way things are going right now, price is currently oscillating around both the key level and the ascending trend line here, where depending on how market participant reacts to the structure will determine if we are going to be buying or selling. Now, the question going into the new week is, will buy pressure persist above the both structure to incite an uptrend scenario, or will price action break down both the ascending trend line and the key level to incite a sell-off? Now, to guide our decision for this week, I have a setup on the 4 hours time frame, which we want to be using to guide our decisions. And one of the things I noticed on the 4 hours time frame, after taking into consideration the nature of price action in the last couple of weeks, it is clear that price action has been bullish. And with this bullish idea in mind, I connected a series of higher lows to give us a couple of ascending trend lines here. But this trend line here is the one we will be using for this week. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying that asset. And we're not selling unless the ascending trend line is broken. Now, one interesting thing about the ascending trend line is how it interestingly shares a confluence with our key level here. And as you will see, the week has begun on a strong bearish momentum, which I did mention earlier is as a result of market participants dialing down on the expectations of a more aggressive Federal Reserve policy easing in the light of a stronger NFP data from the United States. So for this week, scaling down into the 1 hour time frame and trying to decipher how market participants have been reacting to that key level since the new week began, I was able to come up with this simple structure here on the 1 hour time frame. Now, first of all, let's acknowledge the fact that the ascending trend line we spotted on the 4 hours time frame has been broken to the downside to welcome the idea of selling this asset for this week. Now, besides this is the fact that price was initially ranging between the 2042 and the key level at the $2,035 area before it was broken to the downside. And if you are taking advantage of the breakdown of both the ascending trend line and the key level, well done to you for capitalizing on this opportunity. For me, I actually missed out on this opportunity as the time this transaction took place, it was midnight here, so I was definitely fast asleep. But of course, for those of us like me who missed out on that one, I capitalized on the breakdown of the support line here at the $2,027 area, with the hopes that price action will continue to find lower lows and lower highs in this market. So as it is right now, it is looking very bearish in this particular market due to two factors. The first one, price is trading below the ascending trend line, which we talked about earlier. And secondly, price action is trading below our key level at the $2,035 area. Now, with this idea in mind, we should not ignore the potential that price could come back and retest the structures. Now, for those who had missed out on the opportunity of this breakdown of structure, let's wait and see if price will come back and retest the structure to incite a downtrend continuation. Now, with the way things are going right now on the XAUUSD, it makes quite a lot of sense looking out for selling opportunities. So as it is right now, let's see if the market will come back and retest the structure. If it does, if price comes back into the structure, the emergence of selling pressure below that area, which of course will let us know that buyers are finding it difficult to climb above the key level, will be a good sign for us to sell. Now, what are the patterns we want to look out for? Well, a reversal pattern would do, like a double top structure, head and shoulder pattern, or a rising wedge, whichever case it may be. Then look out for the breakdown of the rest of the neckline to incite the idea of selling. Now, it's not all the time that price may come back to retest the structure. Technically, it's not all the time it does this, but this is a theoretical expectations, of course. But in real time, we could see price not go that far before it continues the downtrend scenario. So price may come back into the 2027 before inciting the downtrend move. So we shall monitor how price reacts to the 2027 also. Now, if price comes back into the structure and we continue to see selling pressure here, good sign for us to join. But if price breaks out of the 2027, then price coming back into the structure, we shall look out for reversal patterns to join the decline. So in summary, this whole structure supports selling ideas. Now, in as much as we're looking out for selling opportunities, I know there are buyers of the gold in the community who are looking out for setups to buy the XAUUSD. Now, if we are going to be buying the XAUUSD, the only condition that will make us want to be buying the XAUUSD is for price to climb back above the ascending trend line, then lead to the breakout of the resistance line at the $2,042 area before we can consider buying this asset. But as it is right now, everything is screaming bearish. So we shall exercise patience and continue to look out for selling opportunities as long as price action remains below this structure. So this is my simple view on the XAUUSD at the moment. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5 to 10 seconds to see if there are any questions before we go ahead to round off on today's Extreme Speed live session. So let's see if there are any questions, and then we shall go ahead to round off the session today. All right, so I can see a couple of questions here from Isaiah. Does price of XAUUSD react negatively to appreciation of US dollar? Of course, yes. The XAUUSD is the base currently on this asset we are looking at, while the US dollar. So XAUUSD is against the US dollar. So when you're buying gold, what you're doing is you're selling your US dollar to buy gold. And when you're buying the US dollar, you're actually selling your gold to buy the US dollar. So right now that price of gold is dropping. What it simply means is that people are dumping gold to buy the US dollar. That is why the price of the gold is dropping at this point in time. So I hope I answered your question there, Isaiah. Is that quite okay? I see your comment. Zoom in. Zoom in says that is US oil going up? Well, I hope you didn't. I hope you are part of our session when we were treating the US oil, right? If you are part of the session, we already identified structures on the chart which we will be using to guide our decision. So no one knows if price will go up or down. But what we do know is that we have an edge in the market, which of course is the structures we identified on the chart. So once we mark out the structures on our charts, all we just need to do is exercise patience and allow the structures to mature. So that is what we've been doing. Mark out your structures and wait for them to mature before jumping into any positions. So I hope I made myself clear. Dinah Kuma says voice issues. Really? I hope. Okay, thank you very much for that feedback. So I'll just have to reduce it a little bit. I hope it's better now. Thank you for the feedback. All right, you're welcome, Isaiah. I see your comment, Abdul. Good morning to you. Leonardo DV, you're very much welcome. Um, glad you are with us today till the end. All right, all right. So there are no other questions here. I think it's on this note we have come to the end of the Extreme Speed live session. It has been a wonderful moment with you guys this morning. Destiny One says best price to sell, and TP. Which asset are you talking about, Destiny One? I'm not sure I understand what you mean. Please clarify that quickly. So we've come to the end of the session on the Extreme Speed Live. It has been a wonderful moment with you guys. I really enjoyed every single moment, and I indeed enjoyed the energy in the house. As the more comments I have, it gives me that feeling of positive energy in the house. And thank you very much for your feedbacks, everyone. It's on this note we will round off for today. Today we were able to attend to 4 of the major financial assets on our watch list, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq. We also talked about the USDJPY, and of course the XAUUSD, where we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns only to strategically position ourselves for the next move. So I hope you marked out those levels as we illustrated during the course of the session. If you had done so, well done and kudos to you. All you need to do now is exercise patience and allow the structures to mature before we jump into any positions. And please always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So, and with this understanding in mind, you want to ensure you have a well-defined risk management strategy in place to mitigate against any risk of affecting your portfolio. With that being said here, and for those who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information gathered in this community to make your own independent trading decisions. So on this note, I want to wish us all the best of luck Looking forward to seeing you all same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for tomorrow's trading session. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.